Breaking news out of the Middle East, Israel's military announced that Iran had initiated a drone strike that was just hours away, and the crypto market absolutely capitulated. Bitcoin fell to 61K, Solana went all the way down to $116, and if you've popped open your crypto wallet or your Coinbase account or whatever exchange you're on, you've noticed that you've lost a ton of money. Guys, pray for peace in the Middle East because they're looking at potentially losing lives. But we're going to have a financial wave of impact here in the United States when markets open Monday. I had said in a recent video, I talked about the fact that Biden suing for peace in the Middle East was actually an early warning sign that there wasn't going to be peace in the Middle East. That's how I interpreted it. And I know that in the comment section, people were telling me, Josh, this is not why we're printing some bad candles today. People were telling me it's because of this or that or inflation. I said, guys, we have global conflict on the rise. Goldman Sachs warned about it. And the fact that the president was hitting the platform talking about peace told me that the opposite of that was coming. Turmoil was around the corner, and that's exactly what we've gotten. Now, in almost every video that I did in the last week, I've talked about the candles on the weekly time frame, both in the SPX and in Bitcoin, and I warned that they weren't looking good. And if we didn't end this week on Friday with a good candle for the S&P 500, that it meant that there was going to be more risk to the downside. I talked about a move potentially beneath 5,000 on the SPX. And I also talked about Bitcoin. I said, guys, if we don't close this Sunday with a candle above 69,000, then we were definitely going to confirm a hangman candle and that we were going to get a new low. I didn't know that we would get as low as we got. I did call out the 61K level, but we got there way faster than I thought or even imagined. And every single time I make a prediction, most of the time it happens sooner than I'm thinking it possibly would. And that's exactly what we saw today. Now, we're going to take you guys into the Bitcoin chart, and I'm going to show you some things that maybe you haven't seen before, and I'm going to try to make it as simple as I possibly can because the Bitcoin chart, as well as any chart's complicated. I want you guys to see the big picture. And what is the big picture? Well, this particular candle that we're currently sitting on right now on the Bitcoin chart at the level that we're currently sitting, we've never had before. And so it means that something has changed. Now, it might all get chalked up to the Black Swan event of military action in the world. And so maybe we'll quickly change the candle shape and it might go on to do something better in the next couple of weeks. But at the moment, we have crossed another bridge, this particular bull cycle in crypto that is different than any other time before. We have the halving event less than 2 weeks away. There was the potential that we might get to the 80K level before that. But right now, I would say that unless we get a knee-jerk reaction from these markets or some sort of V-shaped recovery this weekend, I think the markets just told us which direction they wanted to go, and that's lower. We got actually in the last month a lower high, and right now we've gotten a lower low from the previous swing low that Bitcoin gave us. And so at the moment going into the halving, everything is pointing lower. Now, when I did a live recently with Tim, we did a technical live and talked about Bitcoin. He highlighted the fact that the majority of longs that were building up around 65K and then beneath that at around 63K and beneath that at 61K, that there was a lot of longs and a lot of stored liquidity, that if the price of Bitcoin flashed beneath, it would wipe them out. Now, some of you might not fully understand how that works, but the fact is these exchanges do hunt liquidity. The algorithms that are trading crypto absolutely go after pockets of liquidity. Pockets of liquidity are this. So you've got people that are trading Bitcoin, let's say, and they're trading it on leverage, right? The leverage is borrowed from the exchange. So they put in their capital, let's say they put in $10,000 and they go with a 7x or 10x leverage. Then they get a much bigger amount of Bitcoin that they're essentially trading. Now, the exchange wants that 10K because they're not actually giving you Bitcoin. When you buy Bitcoin, you're not like getting it and temporarily holding it. Your trade is what's referred to as a ledger trade. They've got a pile of Bitcoin sitting over here. What's at stake is the capital that you put into the system. And so what's happened here is because of this black swan event, supposedly, we have wicked through a lot of people who are currently in longs expecting a move higher at this level. Because like I said in the intro to my video, every time Bitcoin has gotten back to its all-time high, it didn't retreat. Normally when we get to the place where we're at right now, back to the all-time high, we have a little bit of turbulence and then we make a push higher. This will be the first time that that didn't happen. So people were gearing up to the long side, and this move just wiped out all of their cash, right? If they couldn't protect it, if they couldn't add cash and lower their liquidation level, they got wiped out right now. And the exchanges now took all that capital and took it from their customers and put it over into their pile of assets. That's what just happened to a lot of people. All right, guys, you are looking at all of the Bitcoin cycles. So we've had 3 cycles in the past, and we're currently in a Bitcoin cycle. Started off, the big move of the halving event of 2013 produced a 60,000% pump. And so if you understand what I'm saying, the price of Bitcoin went from roughly $2, it went up 60,000% to roughly $1,400, and that was the big Bitcoin move of 2013. Now, after that, it went into a decline phase and then into a winter phase, and then we entered into the next Bitcoin halving, which occurred in 2017. And from the low of that cycle to the high of that cycle, Bitcoin went up roughly from $166. It went up 12,000% to $20,200, an incredible move. Right away, I want you guys to notice that from 60K, the next bull cycle of Bitcoin, the next halving cycle of Bitcoin, got a significantly reduced percentage move. We went from 60K to 12K, less than 20% of the strength of the previous move in regards to price action, not momentum. And then that brought us into the crypto cycle, the last crypto cycle we had, which was the halving event that occurred in 2020. This is often referred to as the 2021 Bitcoin cycle because that's when the high was made. And right off the bat, we can see that we started off at the low of 3,000 and we finished up at the high of roughly 69,000 is where we hit. You can see that we only made a 2,000% up move, right? And so you can see that 2,000% up move is quite significant, quite impressive financially to go from 3,000 to 65,000 roughly, but it's significantly less of a price percentage move as we had when we had made a 12,000% move. And that brings us to the current cycle that we're in right now, which is the 2024 Bitcoin halving cycle. And currently, we've gone up roughly 350%. You guys know that at the low, we were at about 15.5, and we came all the way back up to the previous high, which was roughly around 65 to 69. We've been sitting at around 68. So we're at the same level that we had ended the peak of the 21 cycle. We've come all the way back to that. And the price action move is only 350%. So the very first thing I want new crypto people to see with their own eyes is it doesn't take a Harvard mathematician to understand that when I repeatedly say in my videos that Bitcoin is cooling off, that price action percentage moves to the upside are slowing down. You can see back in the day that this chart's going parabolic straight up, but over the course of time, each and every time that it has dipped, the move up is not as strong as it had been the previous cycle. And so where does that leave us? Well, let's get a couple more clues from this chart. We're going to compare when crypto got back to its previous market top. So the 2013 market top was roughly 1,400. And by the time we got to the red line on the fib, that's when we got back to the price of 1,400. Now we're going to look at how the candles interact with that red level. We're going to first start off and go back to 2013. I'm going to zoom in so you guys can see this very close. So when we got to the red level, this is a level of resistance on the Bitcoin chart. When we got to this level of resistance, the first thing I want you guys to see is that this candle pressed through that red line. So it pressed through and went over that red line. And this candle represents a month in the market. Now, the very next candle that confirmed to go onto the next up level of Bitcoin, it opened above and closed above, confirming that it was going to stay in and make it to the top of this particular fib level. And that pushed us all the way up to the next fib level where we saw resistance. And in that first crypto bull run, we got resistance here, but eventually we got back, closed above or on top of the level of the fib level. And that then was followed up by a candle that opened above and closed above, pushing us to the top of the next fib level. So let's take a step back and let me just show you where we're going with this. Okay, so let's talk about the momentum again. How many levels of momentum on the fib did we get when Bitcoin broke out the first time? So we'll count them out. 1, 2, 3, 4, 5. So 2013 got to the 5th fib level, which is a pretty significant momentum move. Now the next one, 2017, we did 1, 2, 3, 4, 5. Yet again, it was a repeat. So even though the price action did not achieve the same percentage move up, we did get to the same fib level that we had previously gotten. Okay, but then we got to the last crypto bull cycle, and let's count how many levels we made. 1, 2, 3, 4. Okay, guys, this is a major change in Bitcoin from the previous 2 cycles. We didn't get to that 5th cycle. We didn't get up to that final parabolic push move that we had in the previous 2 cycles. So we went from getting it 2 times to not getting it the last time. Now, I'm going to make my point here pretty soon. We want to look at how things behave at these levels. The red level on each of these fib charts represents the previous high. Okay, so this was the previous high. We got back to the previous high. And when it broke through the red level, it was able to go to the next 2 levels. Similarly here, this high, we got back to it. Once we got through that, we were able to get to the next 2 levels. But this red level, we got through it and we stopped at the blue level, okay? Now currently we're stopped at the red level. Now let me just zoom in so you guys can see the red level. Now that we've identified the red level means the previous all-time high, let's zoom in and see how the price action normally behaves once we get there. So again, you don't see, once we get to the previous all-time high, this is not an area where we get a monthly rejection candle. We don't normally get a monthly rejection candle when we get back to the all-time high. We press in, we open above, we push higher. Now let's go to the next one. Here we are at the red level again. Once we broke over right here, we pressed in, we opened above, we closed above, we went higher. All right, the same thing here with 2021. We got back to all-time highs. You can see that we pressed over the red level. The next month opened above it, closed above it. We pushed to the top of the next level. But then we got a rejection candle on the monthly time frame at the next level. This is what informed us that we weren't going on to the top of the level that we had previously hit twice, which was this yellow level, because we got this rejection candle that closed beneath the blue line. Then it opened and closed beneath it. We came back in 2021 and we tested it again. We got the press through candle, but again, the following month, it didn't open and close above. And that's when all of the traders knew that we had a double top and that we weren't going higher. And that led us into the crypto decline phase and the winter. And this brings us to the current spot. So if you guys are following me and I'm making these technicals make sense, getting back to this red level, the candle that we should have gotten, that we got every other time we got to this level and pressed into it, the candle that came next was an open above and a close above that level. Now we are 2 weeks into this April candle roughly. It is possible that if we somehow reverse and climb and close in this open space, that it would mean that we would go on to the top of the blue level. What does the top of the blue level, what is its price? That's 171,000. okay? And every other crypto cycle in the past, we've gotten to the blue level. So, but what we don't have is we don't have a confirmation candle. If this candle closes in the month of April and it's not green and it's not higher, if this candle does not close in this area in the month of April, then we have confirmation for sure that we're coming back to 49K. There's no other way of viewing it. And what I would think would happen then is that we would make a second attempt to break above the red level, very similarly to how we made 2 attempts to break above the blue level in the last bull cycle. And if we again pressed over, but then on the following month didn't open and close above the red candle, then that would be a confirmation that we were done with the crypto cycle. So at the moment, there's the main points I want you guys to see is this. Everybody can see that momentum is slowing. Everyone should be concerned that in 2013 and 2017, we made it to the yellow fib level, but we didn't make it to the yellow fib level in 2021, which was a pretty significant change in momentum. And now, if momentum follows suit, we have the legitimate concern about not making it to the blue level and failing at the red level. If this month candle closes beneath the red level, that's confirmation to me. We're moving back to 49,000. We'll make a second attempt at the red level. If we fail a second time, then this Bitcoin cycle is over. Now, I know that, like I said, it was going to be a little bit bearish, but I'm showing you what I see in the charts and what I'm going to be watching. I have been saying that 2 things were super important. This month, the candle that we're in right now and the 80,000 price point for Bitcoin are the 2 most dangerous spots that Bitcoin will be in 2024 and 2025. Now, I'm actually encouraged that we didn't push up to 80K. If we had gotten right below 80K and we closed the month below that red fib level, then my bearishness would be extremely high. At the moment, the path seems somewhat predictable to me. I want to narrow things down to you guys for a minute and how you should be thinking about crypto. People get into crypto late. They don't buy the winter. This might be your first crypto party, your first crypto cycle, and you don't know a lot about it. Nothing that we're buying right now in crypto, there's no crypto asset, including Bitcoin, that is proven to be a buy and hold asset. Michael Saylor would disagree with me. And I would actually argue alongside Michael Saylor that that could change. There could come a point of price maturity and price stability for some of our favorite crypto projects that they're not going to drop 90%, or in the case of Bitcoin, 70 to 80%, that they develop a bit of maturity in their price action, less volatility. We saw less volatility in the historic chart of Bitcoin. And because of that, they might become buy and hold assets because they may do more climbing over time than these significant drops that they've experienced. But if this is your first crypto cycle, here's what I want you to understand. The crypto cycles largely last 4 years. The majority of that 4 years, crypto's not going up. The majority of it, crypto's going down. I'm going to kind of overly simplify this, but it's about a year to a year and a half of crypto going up, a year to a year and a half of crypto going down. It kind of brings us right here, I guess. And then about another third of that time is crypto going sideways. And so less than 1/3 of those 4 years, Bitcoin's going up. So the window of money-making opportunity when you're in crypto is really only 1/3 of a 4-year cycle. And then it doesn't go straight up for that period of time. There's some massive dip moments in it as well. And largely in that 1/3 window, which we'll call a year and a half, I've noticed that there's really 2 large pump moves. There's the coming out of the winter phase. Then there is this time where it consolidates and rebuilds strength, and it makes a final push up. Now, it appears that we might be entering into this consolidation phase since Bitcoin decided to not attempt to push right through in the month of April. So if we're going into the consolidation phase, it means that things could actually get a little bit uglier from here. Some cryptos, some altcoins might have already found their bottom. largely until we get through this month, I'm imagining that the best case scenario would be for them to go sideways. Here's the point I'm trying to make. You might only get one more big pump out of crypto. And the majority of people that are investing in crypto are going to hold on to it too long because by the time they get involved, they get really excited. Crypto begins to make sense to them and they start seeing money signs in their eyes and they start seeing the opportunity. They start hearing about the people making millions. Everybody's forgotten the winter and you then end up buying the top. So I went into this crypto cycle with my eyes wide open. I went into it with the understanding that I was going to get largely 2 large pumps for my Bitcoin bags. I've already gotten one big pump. I put a fair amount of that money into cash. It's extremely important to have cash in moments just like this. I'm now expecting that after we get done testing the bottoms here, we're going to get another big push or pump up. And I'm just going to tell you up front, if I can pull another 100 or 200% out of what I'm going to be investing over the next couple weeks, I'm going to lock that in, close out my position, put 90% of everything I've got back into cash, and I'm going to trade with 10 to 20% to cherry pick the remainder of the crypto season. I'm not going to be all in and I'm not going to carry any bags over the next crypto winter and I'm not going to get stuck and I'm going to be content making the money I've made. Only in crypto, largely, can you invest at the right time and potentially pull 400% out of your investments in a short 1.5 years. I'm halfway there. Now I realize ahead of me is going to be one more push, one more pump. I'm going to get it and I'm going to get in and get out. Guys, there's the old saying, we've all heard it. Bulls make money, bears make money, hogs get slaughtered. I want you guys to be looking at the realistic fact based on what I told you about Bitcoin. If this ends up being a shorter crypto cycle, or if we don't end up going parabolic above that red fib line, we don't hit the blue or the yellow. If we don't, then it means Bitcoin's coming back to 50K. And when it goes from 50K back to 80, you're going to get one more rise of all of the altcoins. And that's going to be your final opportunity to cash out. People are going to say when we get back up to that red line, people are going to say that it's going to break through and go parabolic up to 177,000. And at the moment, I don't see that. I see momentum slowing. Institutional adoption does not mean that this is going to go parabolic because I think that institutions can take the next decade and fill their bags and align themselves with the decentralized and the centralized exchanges. They're going to take their time putting control into the system so that when they want to pump and then when they want to dump, they can make the most amount of money. But we have to be wiser. We've got to have our eyes wide open. Guys, this is the Stocks with Josh show, and I appreciate you guys joining me on the weekend. I appreciate the likes. I thank you for the hearts and the comments, and I want you to hit that subscribe to getting actionable technicals for stocks and crypto. This is going to be an exciting week going into Monday. I'll be over in the Discord, myself, StockMo, Keenan Grace, and Stock Up with Larry Jones, where we give trade alerts, technicals, and answer questions. Guys, check that out and join us over there. Have a great weekend. Peace and blessings. Take care.